Ladies and gentlemen, good day and welcome to the BALAXI Pharmaceuticals Limited Q3 and 9 months FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akash Mehta. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I welcome you all to the Q3 9-month FY21 earnings call of BALAXI Pharmaceuticals Limited. We have with us Mr. Ashish Maheshwari, the Chairman and Managing Director from the company. The discussion today may include some forward-looking statements and must be reviewed or considered in conjunction with the risk in the industry in general and our business in particular. Now, I hand over the call to Mr. Ashish Maheshwari for his opening remarks. Over to you, sir.
Good evening, everyone. On behalf of BALAXI Pharmaceuticals, I extend a warm welcome to everyone to this earnings conference call for discussing our overall performance in the quarter and the 9 months ended 31st December 2020. This is a maiden earnings call and hence marks a special beginning for us. We have issued a detailed press release and investor presentation for the quarter. Hopefully all of you have had a chance to review it. At the outset, I hope that all of you and your loved ones are healthy and doing well in these unprecedented times. I would first like to give a brief overview of the company, followed with a review on the financial performance during the quarter and the 9 months ended 31st December 2020. After this, we shall take questions from the participants. BALAXI Pharmaceuticals Limited is a branded IPR-based pharmaceutical player focusing on frontier markets with a vast and growing portfolio of prescription OTC drugs across multiple therapeutic segments. The company is engaged in supplying branded generic and generic medicines through its own well-built distribution network across Angola, Guatemala, and the Dominican Republic. These products are procured from WHO GMP-certified contract manufacturers based in India, China, and Portugal. BALAXI is also present in the branded consumer products business and the ancillary business, which is builders hardware in Angola, which complements the existing pharmaceutical business in that country. These businesses leverage our well-established ongoing infrastructure and channel relationships in Angola. The pharmaceutical business, as of now, comprises of 548 product registrations across Angola, Guatemala, and Dominican Republic, Honduras, and El Salvador. The company follows a distinct and a unique produce, stock, and sell model, where pharmaceutical products are contract manufactured through our selected WHO GMP-certified plants and sold through a robust ongoing infrastructure of 21 warehouses and our own fleet of delivery vehicles. We aim to further strengthen our market share in the existing geographies of Angola, Guatemala, and Dominican Republic, and poised to grow in Honduras, El Salvador, Nicaragua, and Central African Republic. The company's ancillary business consists of builders hardware products in Angola. BALAXI offers a basket of products in its portfolio comprising of over 300 SKUs, covering a wide range of product categories such as construction tools, agricultural tools, sanitary ware, etc. The products are sourced from India and China and sold under our brand name BALAXI. BALAXI is well entrenched in Angola and operates across all 16 districts of the country through well-built infrastructure of 15 warehouses for this vertical and a fleet of vehicles to augment last-mile delivery. The company has also established a branded consumer products business by selling a wide variety of biscuits and pasta all across the country in Angola. BALAXI has a couple of warehouses and fleet of delivery vans to supply goods to distributors under this vertical, to distributors, supermarkets, and general stores. We sell biscuits under our own brand name, YAP. We also launched toothpaste under our own brand name, which is Boadent. And we plan to add other products like disinfectants, hand sanitizers, etc. Coming to the financial performance, the company recorded a revenue of 178 crores in 9 months ended December 2020. EBITDA came in at 30.9 crores, EBITDA margin was 17.3%, and the profit after tax was 29.8 crores. PAT margin stands at around 16.7%. Segmental performance. Revenue from pharmaceutical business stood at 29.8 crores on account of 105 crores. Pharmaceutical business stood at 105 crores in the 9 months ended 9 months of FY21. Sales mix of branded generics for Q3 FY21 was 28:72. 28 was branded and generics was 72% of goods sold, which is a slight improvement because overall H1 FY21 was 24 was 76. We are focused on growing share of branded generics in our overall pharma sales. The pharmaceutical business contributes around 59% of total revenue and 68% of our total EBITDA. Our branded consumer products business rebounded after COVID impacted Q2 of FY21. This segment reported an increase of 114% quarter-on-quarter in revenue and 175% quarter-on-quarter growth in profit after taxes. We have added several products under our branded verticals such as sanitizers, disinfectants, and a few products in the confectionery vertical. For Q3 FY21, sanitizers accounts for nearly 3% revenue for this vertical. Our ancillary business witnessed an increase in revenue to 22.2 crores in Q3 FY21 versus 17.7 crores in Q2 FY21, registering a growth of 25%. In terms of geographic bifurcation, Angola contributed 81% of the overall pharmaceutical revenues, followed by Dominican Republic at 13% and Guatemala at 6% during the third quarter of FY21. If we look at the same thing for the 9 months ended December 31st, the breakup was for Angola was 78%, Dominican Republic was at 16%, and Guatemala was at 6%. In terms of the outlook for the future, the company presently has 548 pharmaceutical product registrations and 582 product registrations across various geographies are in the pipeline, the approvals for which are expected in this calendar year, slowly over the next few months also. We aim to double our product registrations over the next 2 years. BALAXI is well positioned to capture incremental market share in existing geographies and expand in other target territories. The company aims to foray into other Latin American countries and CIS markets and establish its presence at least 20 frontier markets over the next 5 to 6 years. I would like to thank you very much for your kind attention, and now the floor is open for Q&As, questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Devendra Pandey from DP Financial Advisory Services. Please go ahead.
Thanks for the opportunity and wishing you a happy new year. Sir, I have a couple of questions. My first question is on our recent product launch of sanitizers. So how many more products are we intending to launch by the end of this financial year? And I assume that this product would be the bulk product. So the EBITDA margins for this product would be lesser than our other products, or is it at par with other products?
So you are coming to the FMCG segment. So your first question was, what are the more products we are going to launch in this calendar year in this segment?
In this financial year. Sir.
In this financial year itself?
Yeah.
No, in this financial year, I don't think we are going to launch more products. We already have biscuits, we have wafers, which comes under confectionery, we have sanitizers, and we have disinfectants, and we have a toothpaste. These are the 5 products that we are doing in the FMCG segment. Of course, within biscuits, we are doing 8 kinds of different kinds of biscuits. Yes, and one more product that we have already, yeah, you're correct. One product that we're going to launch in this financial year is tomato ketchup and mayonnaise, which will be in the addition to our FMCG basket, what we already have. Coming to your second question of what are the EBITDA margins on, what are the margins, gross margins on sanitizers, and is it better or lesser than other products?
Correct.
The margins on sanitizers, when we started off earlier, were very high, but now they have come to normal, a little more than normal margin in FMCG products. But yes, overall, the FMCG products, the margins today, biscuits give us a lot of volume with low margin and visibility. Wafers and ketchup are better margin products, but the volumes are low. And toothpaste is a segment which we have been very successful, where we are seeing good sales every month. But the margin also there is in between the margins of biscuits and wafers. So the FMCG segment, no, sanitizers does not have the highest margin. And the margins across all our segments are between 12, 13 to around 22-23% based on the product.
Okay. And sir, my second question is on our working capital cycle.
Yes.
So can you give us some light on each segment of our working capital cycle, that is inventory, receivables, and payable days?
Good. That's a good question. No. Okay, you will have to listen out because I have all the ratios here with me. So this is what happens. Basically, Guatemala and Dominican Republic. These two countries are our wholly owned subsidiaries. Okay. So when they are wholly owned subsidiaries, the debtors are counted from the day the sale is made from the warehouse of that particular country.
Okay.
So supposing goods are shipped from India or China, it takes around 60 to 80 days. Nearly nowadays the cycle has gone up. It takes around 80 days for the goods to reach these two geographies, Guatemala and Angola. And at any point of time, we have to maintain stocks within the warehouse, which we generally maintain equal to around 2 months of sales. Around 2 months of sales.
Okay.
So if you add that, 80 plus 60 is 140 days of inventory, just inventory. And then when a sale is made, let us say, in Guatemala, the credit period is around 60 days, which is slightly gone up in Q3 because of the Christmas holidays. But general credit period is 60 to 65 days in Dominican Republic and Guatemala. So 140 plus 60, it's around 200 days of inventory, of turnaround. So from this 200 days, generally we are able to manage it around 180 to 185 days. We get credit of an approximately 40 days, 40 to 45 days, because we have suppliers request credit for 90 days to 100 days. And from China, we are not able to get more than 15 or 20 days. So the overall credit period that we have is around 40 to 45 days. So 140 days is the working capital that we need to run our business.
Okay.
So on a thumb rule, we calculate that we need 40% of working capital for 100% of our turnover. Let's say if your turnover is 100 crores, if we want to increase our turnover by 100 crores, we need a working capital of 40 crores.
Okay.
Yeah. Now for Angola, it works slightly different because Angola is not our wholly owned subsidiary. Angola is a associate company where we hold 49% of the equity. So we bill it to Angola, and Angola, the working capital cycle period is the same, 180 to 190 days. But because the Angola company has an equity of its own and has taken some bank loans of its own, Angola pays us back. 1 second, where is that figure? Angola pays the money back to us in 1 second. Around 140 days. No, one second. Where is Angola? Angola is 116 days to get back our money from Angola.
Okay.
It's not 180 days. So our working capital cycle is 40% is required.
Understood.
Understood? Yeah.
Yeah. And so my last question would be on our strategy front. So in your presentation, I can see that the revenue mix for your pharmaceutical is around 60% for 9 months.
Yes.
So, and around 10% is the branded consumer products and rest is the ancillary.
Yes.
So, given our expertise in pharmaceuticals, what is our long-term goal for our revenue mix? Probably 3 to 5 years down the line.
Excellent question. Now, we have to understand that we are basically a pharmaceutical company. Because we are so strong in Angola with our distribution expertise and our on-ground infrastructure, we introduced an ancillary business. The erstwhile BALAXI group introduced.
Participants, we would request you to please stay connected as you have lost the line for Mr. Maheshwari. Mr. Mantri, would you like to continue while we connect him, sir?
Hello.
Hello.
Just a moment, sir.
Hello.
Yeah, we have the line now reconnected for Mr. Maheshwari. Sir, you may continue, please.
Yeah, so this hardware business was introduced as a bolt-on business just to cash in on our infrastructure. The branded consumer product business was also introduced in Angola because of our strong brand presence in Angola, BALAXI as a brand, and Angola is the second highest importer of biscuits from India. So it was an opportunity which we thought we should capitalize on, we being present in that geography of Angola. Going forward, our total concentration is only on pharmaceutical. Now, we do not have these businesses in Dominican Republic or Guatemala. Neither are we planning to do this business in the other geographies of El Salvador, Honduras, Nicaragua, or Central African Republic. Everywhere we are going only for our pharmaceutical product registrations and we'll be concentrating only on our pharma sales. So 3 to 5 years from now, I see more than 80 to 85%. And the ancillary hardware business has saturated already in Angola, more or less. But sometimes we see spikes of 10-20%, but it has, on an overall financial yearly level, it is a bit saturated. We don't have much place to grow there. It will grow at a normal percentage. So in 3 years from now, I see 80% coming in from our pharma business only.
Okay.
Because Central America, the total growth will be from pharma only.
Got it. Understood. Thanks for detailed explanation, sir. I will join the queue if I have any other questions.
Thank you.
Thank you. The next question is from the line of Aditi Sawant from AIF Investments. Please go ahead.
Hello.
Yes, Aditi.
Thank you for the opportunity. My question is regarding the product registration. As the product registrations are constant currently at 548, so when do you expect it to increase? And by number, if you can tell me the exact number, or by the end of FY21?
Yes. We have not seen an increase of product registrations in the third quarter, because in the first 2 quarters of this year, all ministries of health in all countries were impacted by COVID works. So works were not going on very quickly in the product registration departments. But now, since the reopening of all offices on January 4th this year, we are seeing a good movement in that. In fact, in this quarter, Q4, we are expecting 12 and 12, 8, 20, 16. We are expecting at least 40 product registrations to come up in this quarter.
Okay. Yeah, that's it from me.
And more in the next quarter.
Thank you.
Thank you very much. The next question is from the line of Sachin Shetty, an individual investor. Please go ahead.
Yeah, sir, thanks for the opportunity and congratulations for a good set of numbers.
Thanks,
sir, my first, I have some couple of questions. So the company has 548 pharmaceutical products registrations spanning across 5 countries. and another 582 product registration in the pipeline.
Yes.
So in this case, I have to add all this 582 plus 582. Can I say it is 1100 products? Or what exactly, sir?
Yes. You can say, see what it means is that 548 product registrations we already have, and we are already doing business with these product registrations in these products. When you say 580 products are in the pipeline, it means more applications for 580 products have been filed or in the process of being filed. Okay. So we are doing it bit by bit, like Central African Republic, 175 products. In Guatemala, we have 65 now, we'll go up to 140, 150 products. In El Salvador, I hardly have 12 now, we are going up. So we are ramping up these processes. As and when we receive product registrations, new products will enter the market, which will contribute of growth in revenues. So how this happens is, like this quarter, I'm expecting around 40 product registrations more to come in, 40 to 45 from Central America. So supposing I get, let's say, 12 product registrations in the month of January. If I get 12 products in the month of January, by the time I ship out these goods, it will be March, end of March. And by the time the goods reach the grounds there, it will be end of May. So if I get a product registration in January, the goods will be available for sale in the particular market in June. It's a 5-month to 6-month gestation in the first time, and then it comes normally. So as and when I get more registrations, every 6 months from the month in which we get registrations, we'll see higher and higher revenue from those products.
Okay.
So
sir,
then you can ask me that when will we have this 1,000 products registered all with us? Because there's a pipeline of 580 products. So we are expecting this pipeline to be completely fully registered at the end of FY22. Slowly, every month we'll be getting something. By January 22 to March 22, I'm expecting all 580 products to be completed. Does not mean that they will come only at that time. We may expect 40 in this quarter, we may expect 80 in the next quarter, we may expect 125, 150 in the next quarter, something like that.
Okay. Understood. And sir, so this 40 products in pipeline just now you told. So what are the revenue potential in terms of percentage? In terms of percentage. I'm not asking any forward only.
No, in terms of percentage, Sachin, I will have to really, because in our mind, my figures are in each country, right?
Okay, sir. No issue, sir. Sir, my next question is that EBITDA margin is 70.5%. Is sustainable in near future, in near couple of quarters, or you are facing some challenges?
No, this will gradually go up as the percentage of pharma goes up in a revenue mix. This will go up, and there are absolutely no challenges in maintaining this GP ratio. It will only go up. Because one experience that this management has in these geographies over the last more than 17 years is once you have a range of products on the ground in your warehouses, then margins are never an issue. These margins are sustainable margins, and they will go on.
And for the FMCG business, I think there should be some volume required. So has there any volume is created in the Angola, or what exactly, sir?
Yes.
So it is still...
We were supposed to be taking off in our FMCG business sometime in April last year.
Yes, sir.
But then COVID affected us, and because the schools got closed, malls got closed, and entertainment areas got closed, our biscuit sales took a hit. We didn't get the sales that we wanted. That was our first FMCG product, biscuit. So now that has slowly, it is now increasing. We are seeing movement in it from October, and from January we are going to see constant FMCG sales. The sales are fluctuating in the last 6 months, but now we will see constant sales. And our toothpaste, which was launched sometime during the COVID times, has took off very well. So yeah, FMCG will be showing growth quarter on quarters in volumes.
Okay, sir. Sir, my next question is, what is our understanding with contract manufacturing sources, like contract manufacturing plants in India and Portugal? So, understanding in the sense of regulatory as well as, I haven't seen any contract agreement in your annual report. That's why I asked this question.
No, no. We have contract manufacturing agreements with all people that we work with. Contract manufacturing agreements are to be submitted to all regulatory departments also in those countries. Our contract manufacturing says very clearly that on the registration certificate, generally, the name of the supporting manufacturer is there. This manufacturer cannot go to that country with his products based on our registration because we are the license holders.
For how many years, sir?
For this, they give it for 3 years and it is renewed every 3 years. So we are the license holders for that product. As a second line of registration, what we do is, and all our suppliers are very old suppliers, we have relationships with them for more than 10 years. But as a second line of defense, what we do is, whenever we think that this product,
Participants, we would request you to please stay connected as you lost the line from Mr. Maheshwari.
Okay.
yes, Sachin, you're online?
Just a moment, sir. Yes, participant, we have the lines for Mr. Maheshwari connected again. Sachin, Mr. Shetty?
Yes.
Yes, Sachin, going or disconnected. So we were talking of contract manufacturing agreements.
Yes.
Each license is there for a period of 3 years generally, and they get auto-renewed. Just some particular papers we have to get, they renew it. And in case we feel that a particular vendor the situation has changed where the particular vendor may not be able to supply us a particular product, then we go for an alternate manufacturer registration also, which is an easier process.
Okay, but that company is not entitled to register in your products, like BALAXI?
No. The license holder, product registration is like a license.
Okay.
BALAXI is the holder of the license. He cannot sell in that market. He cannot enter.
What about the GMP audit, sir? They are facing in behalf of BALAXI.
On behalf of BALAXI, we have a consultant team, a senior consultant team, who visits our factories. We have a system of that each of our vendor must be visited at least once in 9 months, is our policy. Same time, we keep a track of all the WHO GMP certificates and see to it that whenever they are expiring, that they are being applied for and they are being renewed or duly on time. But from our side, we have a team of consultants who visit and give an independent report to us. They are not our employees. They give us an independent report on the GMP compliances of those factories.
Okay.
Once in 9 months, we go.
Okay. Sir, I have only 2 questions left. So our competitor Shalina Pharma is also in the same business, but they do have their own manufacturing units. So they are not dependent on some Indian or Portugal. In this case, we are totally 100% dependent on others. So has there any plan for this one, sir, like manufacturing units or something like this, sir?
Because you are mentioning Shalina,
Uh-huh.
I would like to tell you that Shalina has only one unit in Mumbai.
And
okay. 80% to 85% of all these goods are outsourced. Because in the pharmaceutical line of business, there are dosage forms in formulations. Like we deal in 9 different finished dosage forms. So tablet is one dosage form, capsule is one dosage form, infusion is one dosage form, injectable is one dosage form. So it is not possible for a player to have a factory for all the dosage forms. Nobody does it in pharmaceuticals. Nobody does it. Outsourcing is a way of life. It has to happen. So, and then we deal in so many therapeutic segments, which are all kinds of therapeutic segments. So it is not possible for any company to have manufacturing for all these kind of products. I cannot manufacture 300 products, putting up one factory which will be so huge, the capex will not justify my returns.
Yes.
And then, secondly, we have found in our business, in the last 18 years I'm in this business, 2002, 19 years now, I have never found dearth of capacity for manufacturing in India or China or Portugal. So what is the reason for that? Why do I get so much of manufacturing capex? Because we deal in simple, saleable products. We are not dealing in any critical care products which can be in short supply or some newly discovered molecules. No, we are in products which have been there for several years. That is how our range is on 250 products. So for these kind of products, there is enough capacity available all across India, all across China.
Okay, sir. Okay. Yeah, understood.
The day we find that we are not able to source, that day we can set up a plant. A plant is not a big issue to set up in pharmaceuticals. It takes less than 1 year to set up a plant.
Yes. Mm-hmm. Okay, sir. Thank you. Sir, my last question is, has there any plan for inorganic growth in near future, like brand acquisition? Since we've grown very good, since company posted very good profit, and BALAXI brand itself is a very good in company. So, has there any plan for any acquisition, inorganic growth or organic or something like that?
Inorganic growth is something that is somewhere there at the back of our minds right now, but it depends on the availability of sufficient capital for acquisitions.
Okay. Okay, sir. Thank you. And congratulations once again for a good setup number.
Thank you, sir.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Sir, thank you very much for holding the call. Sir, I have a few questions. The first one is a clarification. You said Angola working capital cycle, the dynamics are different, that I understood. And then you mentioned 116 days. Did you say 160 or 116?
116.
116. Thank you, sir. Sir, second, sir, these 580 odd new registrations, what's the scale of, what's the potential size of these registrations? Because obviously these are new geographies, and how big are they compared to your existing?
I can give you a generic answer to this.
Sure.
Once I say 580 products, our general experience, my general thumb rule is that I'll be able to get, 1 second. I'll be able to get at least anything between $3,000 per product per month. Okay, that's my general rule.
Okay.
So even if I do $2,500 per product per month into 580 into 12, it gives me $17 to $18 million upside, anything between $70 to $20 million. Easy.
Got it.
Easy.
Got it.
But this is a very generic thing I'm telling you. It can be more. It can be much more.
It's a very useful matrix that you have shared. Sir, and in these new geographies, how do you strategically look at them? Because Angola, I believe, would be the largest country still after you have done your geographical expansion. So individual markets, when you target a new market, say, I just hypothetically speaking, you are moving into, let's say, Sri Lanka, hypothetically.
Yes.
So why are you targeting Sri Lanka? What makes a particular market attractive for you? What do you consider? And because these are new geographies, you have mentioned that Angola is a special case for you because you have great strength in the distribution network. So when you enter these new geographies, why are you entering these new geographies?
When I say Angola has great distribution network, it's because of the number of years that I already spent in Angola. And Dominican Republic, we have repeated that model to a certain extent, and we hope to succeed in all Central American countries. Coming to your second question, how do we identify our markets? We have our own process of identifying the market where we see the GDP per capita of a particular country, where we see that are these non-English speaking countries. We don't like to go to English speaking countries because we face a lot of competition from India itself.
Right.
So we see that they are non-English speaking countries. We see that these are not countries we see countries with but inequality in the distribution of income, right? If you look at Angola is a $4,500 GDP per capita country. To give you a context, India is $2,000 GDP per capita country.
Yes.
But we identify such countries where the GDP per capita is high, but the inequality of income is very high also.
Right.
So these are the markets which want middle-level products like our products.
Right.
I call my products middle-level products because then they are at the top end of the level. We have the MNC products, right?
Right.
And then we are there And then at the lower end are products which are made by locally or by some very small local manufacturers, no adherence to quality standards. So we place ourselves in the middle level of this, and we find that our strategy has been quite successful in this way because we stave off competition from India. And another one of my theories is that when you enter a market, enter with at least 125, 150 products. I generally don't enter the market with 25, 30 products. Because then I am not able to attract retailers to my warehouses, my depots. Only when I enter with 125, 150 products do I place myself as a long-term player and a big player. And I get response from the retailers very soon.
Got it.
And the strategy has always worked.
It makes sense also. It makes sense. You have the entire basket. So, on the distribution side and on the branded generic side, exactly what kind of presence do you have on the ground? When you are going for branded generics, is the strategy similar to what we see Indian players doing in US or Indian players doing in India? Or is it something completely different because these markets are different?
It depends on the country. Like in Central America, let's say Guatemala, we introduce branded products, and there is a certain stepwise thing to do branded products there, which are not as fancy as you see in India or the US. They are more simpler. They are more like flyers and banners in retail stores, some balloons, some merchandise, and doctor visits to educate them. There, the doctor visits doesn't work as if they write the brand itself, but there are some doctor visits to educate them, and some attractive stickers and all on the retail stores, very attractive packing. That's how we develop a brand. It's not on the stores, it's not on television or not on holdings or anything. But within the retail store, we try to make some presence. Buy a shelf, put our entire thing there, buy merchandise, give it to people to wear it, something like that.
Right. And sir, these registrations, when you do, what are the costs that you incur generally on these registrations?
Now, that is something that I wouldn't want to divulge on the call.
Right, sir. Okay, I understand, sir. Yeah. No, I understand. In terms of the accounting policy, do you capitalize these costs over a 3-year period, or you
we don't.
Right. And the nature of the cash outflow for registration, is it an annual fees that you pay, or it's a one-time upfront number?
One-time upfront cost.
Which you expend out?
Yes, we expend it out.
Excellent, sir. And sir, in terms of capex, would you be spending a lot of some money for your warehouses going forward? Could you quantify that, sir? What kind of capex would you be looking at?
No, all our warehouses are leased.
Oh, great.
We don't own any properties outside of India.
Great.
We totally refrain from capex. We use our money for working capital.
Yeah, I could make that out, sir. And so one final question, the new batch of registrations, right? You said that next quarter you will get 40 and then they will keep on ramping up.
Yes.
So to reach the full potential revenue from these batches of registrations,
FY23 will be the full potential.
But generally, sir, if we get a registration today, how long does it take to ramp up?
6 months.
Oh, that's it?
After we get the registration.
After you get your registration. And so what is the pre-registration process? How long is that?
12 to 15 months.
Got it.
After submission. So you can say 15 to 18 months when we start off making the dossier.
Sir, I didn't get that part. I didn't understand.
12 to 15 months after the dossier is submitted to the Ministry of Health in that country. It takes around 3 months to 4 months for our regulatory department to make a particular dossier.
Right. So 12 to 15 months plus 3 months, and then you will get it, and then 6 months to ramp up.
That's it.
Perfect, sir. Perfect. Thank you very much, sir. The call has been very useful. Thank you, sir.
Thank you.
Thank you very much. The next question is from the line of Ashok Agarwal, an individual investor. Please go ahead.
Yeah. I just wanted to know what is the impact of foreign currency movements, let us say, dollar appreciation or depreciation over the time. So how we safeguard, and also how we safeguard ourselves.
Yeah, that's a good
So
question.
it's more a trading, totally a trading business actually.
Yes. That's a good question. There are dollar fluctuations in these countries, and on average, dollar fluctuations are around 10 to 15, around 10 to 12 to 13% in a full year. So whenever the dollar fluctuates and generally depreciates, it never appreciates. The local currency depreciates and the dollar appreciates. So whenever that happens, we raise our prices to the extent that it is totally acceptable in these markets. So for whatever we have stocks on the ground, we don't lose any money because prices are raised to that extent. In our SAP system, the prices, we define the prices in dollars and we define the exchange rate in our SAP system. So supposing the dollar goes up from, let's say, 55 today to 58 tomorrow, we change the dollar rate in our SAP system 55 to 58, and all our selling prices get revised. So because our selling prices get revised, we don't lose any GP ratios because of the differences in the dollar. Where do we lose some money when the dollar depreciation happens? As for money that is there in the bank, in the local currency, and the receivables. That is where we lose some money. So that we try to do, we try to move the money as fast as possible from these banks, and we try to keep our receivables. There we have a certain amount of this thing in the dollar. But many a times we make a lot of money on dollar in India, on the Indian rupee. So generally we feel, from our experience in the last so many years, that around 5 to 6% of our income, gross income, we generally lose on dollar depreciations.
Okay.
Because that is the reason you see my other income going up or going down or negative other income sometimes. The other income is nothing but the currency fluctuation.
Okay. So basically, whatever is the inventory which is already reached those countries, let us say,
yes,
it is safeguarded by this mechanism that the retail prices will be adjusted as the currency, local currency moves up or down.
Yes.
Yeah. Okay. That's very useful to me. Thank you very much.
Yes.
Thank you. Anyone who wishes to ask a question may press star and 1 at this time. Our next question is a follow-up from the line of Devendra Pandey from DP Financial Advisory Services. Please go ahead.
Sir, I have a follow-up question on our strategy.
Yes,
so, if I'm not mistaken, our revenue from Angola is around 80%, right?
Yes.
But when I look at the slide where you have given the economic data, so whatever the economic parameter I look at in terms of credit rating, inflation, GDP growth rate, so in any economic data term, Angola, I think, is the laggard where you are present. But since, but even after that, our bulk of our revenue comes from Angola.
Yes.
So I just want to understand what is the reason, and are we trying to reduce that going forward?
See, what happens is data shows the economic thing of a country in one particular way. Now, if you look at Angola that way, Angola is a country with a population of just 2.5 crore people, which is not even the population of one city in India. Right?
Mm-hmm.
But on the ground, the situation is different. There is a demand-supply gap in import-dependent countries. This demand-supply gap in pharmaceuticals, that is the reason why we are able to get very good, healthy margins from these countries. On the other hand, if you look at the GDP per capita of Angola, it is $4,500 per capita, which shows that there is a great purchasing power in Angola. So those statistics tell one story on paper. On the ground, reality is a bit different. Having said that, why are we so big in Angola is because we have been working there for the last 10 years, from 2008, 12 years now. Going forward, Central America is our focus, where there are 6 countries. We are working in 4 right now: Dominican Republic, Guatemala, El Salvador, Honduras, Nicaragua. These are the countries where we want to work and expand in the next 2-3 years. And there's another country in Africa called Central African Republic where we are expanding. So going forward, we are not looking that Angola is going to give us so much of our percentage of revenues, though the volume may be the same. The percent of the revenues will drastically go down from Angola. Drastically, it can be in the range of 33% itself in 3 to 4 years.
Okay. Okay. Understood. That's very good. And which country are you really hopeful will take up the pie from Angola the most?
Pardon? I didn't get it, Devendra.
So since, as you said, that the revenue contribution from Angola will come down to 35%
Yes.
from current 80%. So which country will occupy this pie?
Central America, 4 countries are in one row if you look at the world map. Guatemala, Honduras, El Salvador, Nicaragua. These are 4 countries in one row, which will give us the chunk of business which will bring down Angola by a very drastic margin.
Got it. Thanks. That's it from my side.
Thank you very much. As there are no further questions, I now hand the conference over to Mr. Maheshwari for closing remarks. Over to you, sir.
So I would like to thank everyone to join us on this earnings call for the third quarter and 9 months ending FY21. We hope to see you all again in the next conference call. And I think by the next conference call, we'll be in a much better situation than what we have now with the vaccines coming in. Please stay healthy and stay safe. Thank you all.
Thank you very much, sir. Ladies and gentlemen, on behalf of BALAXI Pharmaceuticals Limited, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.